Hello, this is Jordan, and this is your Precious Metals video market update. This is being recorded on the evening of Wednesday, October 21st, 2015. Let's start off and take a look at the daily chart of the US dollar, which could be coming to a decision point in the days or weeks ahead. Now, over the last week or so, the dollar has been rallying. It rallied from just below 94. It's rallied up to 95-ish today. And note that twice in the last 2 months, rallies stopped at the 50-day moving average, which is declining. That's currently at 95.6. So it's possible that the dollar pushes up a little bit more, then retreats. But you can see two options here, which I've sketched out. If the dollar breaks below 93, then it could decline to a major confluence of support around the 89 to 90 area. We've got the 400-day moving average, which is moving in there. 89 to 90 is also the 50% retracement from that huge advance in the dollar that we saw from 2014 into 2015. And going back, if you look at a 5 or 10 year chart of the dollar, I mean, there's significant peaks around 88, 89. So that's one possible option. Again, breaks below 93, tests 89, 90. On the other hand, we should keep our eyes open for the potential for the dollar to test 93, but then have a strong bounce higher. In which case, if it follows that route, then it could be setting up for another powerful move higher in 2016. So these are the short-term and longer-term implications with respect to 2016. Now here we have the daily candle charts of gold and silver, and both had nice little breakouts several weeks ago. We noted upside targets, measured targets from the breakouts of 1220 for gold and 17 for silver, and the 200-day moving average, that resistance, you can see that it's holding the metals right now, in silver especially. Note that silver a couple weeks ago, I mean, it failed to go above the average, then it went above it, and in recent days it's back below, and we can see what happened today on Wednesday, just strong or fairly sizable down moves in both metals, close at the lows of the day. Back below the 200-day moving averages. So this is not a bullish picture here. Ordinarily, I mean, what we'd want to see is both metals just have a slight pullback from the 200-day moving average. Then they reverse back higher and go higher and reach those targets, which we've laid out. And instead, it looks like the metals were unable to reach those targets, and they're failing around initial resistance at the 200-day moving average. So, I mean, obviously things could change in the days ahead, but right now this doesn't look good for the metals. And if they fall back below support, which is 1550 for silver, and then gold around 1140-ish, if the metals fall back below those levels, then this rebound that we've seen is pretty much over. Here we have the weekly candle charts for the miners, GDXJ and GDX. Now the miners, like the metals, rallied up to resistance and are correcting now. Keep an eye on the 50-day moving average or the 10-week moving average as shown here. And there's two potential scenarios here in my view. One is that we see the miners just consolidate over the days in next week or two, and they're able to hold above the 10-week moving average here. So if we kind of get a bullish consolidation and they hold most of the recent gains, then they could be in position to move higher and take out the resistance at 17 and 23. 23 for GDXJ, 17 for GDX. Take out that resistance, possibly mid-November or going into the end of the year. Now the other scenario would be we get a deep retracement or a retracement of most of the gains that we've seen in the last several weeks. And in that situation, one thing we have to remember is, or not remember, but focus on here, you can see with the support lines I drew, just above 18 for GDXJ and 13 for GDX, the miners spent about 3 months carving out this bottom here, so that support should be really strong. So um, if the miners fail to break out, it's certainly possible they could decline back close to that strong support. But if they get close to that support, they would be a buy again or an accumulate. So if they don't break out, I think we could. Obviously, this is subject to change, but projecting out into 2016, maybe we get some kind of range-bound activity or a long base. Now, in this analog, we're looking at the longest bear markets in gold. Now, it includes 1987 to 1993, which is the longest bear in gold. And in addition to that, we have the 1996 to 2001 bear, which if you're looking at price, that's the 99 to 2001 double bottom. So if you're looking at price, that bear really ended in 1999. But in terms of time, it ended in 2001. It was 5 years long. And the other one that we have not included here is the 1980 to 1985 bear, which after 1982, I mean, similar to 99 and 2001, that bear kind of made a double bottom in 82 and then 85. Now, if that was here and it was on the same scale, then that would project to a bottom in October 2016, which is basically right where the other two are here, as you can see. So what this tells us is the current bear is now 4 years plus, starting the 5th year, and based on the fact we have 3 other bears that lasted 5 years and all about the same amount. And then another thing to keep in mind is I'm not big into cycles, but gold tends to have a 8-year cycle that a lot of people talk about. Now, let's go back. Gold had a bottom in late 1976. Then it bottomed in 1985, so it was almost 8 years. It bottomed again 93, then 2001, then late 2008, so it wasn't quite '09. So, I mean, 8 years from '09 would be 17, but, that doesn't mean the bottom can't come in late 2016 like we saw in 76 or late 2008, which I just referenced. Now, all these numbers are confusing you, but if you're reading them off of paper, you can see the 8-year cycle. It makes a lot of sense. So anyway, we have a confluence of targets as far as time, which tells us, and we know that late summer gold tends to take off. Then it's usually a good time for gold. So this is just something to keep in mind, that if this bear market extends into 2016, then we have a couple things lining up that says, gold is due for a very strong move higher starting at the end of next summer. So just something to keep in mind. Another thing to keep in mind, if you haven't already, is go to thedailygold.com/book and get a copy of our free book. We're giving it away for free. Just put in your address there and opt in, and you'll get the book, follow the instructions, and you'll get it sent to you automatically. And also, you can follow more of my work at thedailygold.com. If you have any comments or questions, feel free to email me, jordan@thedailygold.com. And thanks, everyone, for listening and watching. I wish you all the best, and look forward to talking with you again soon in the next week or two.